want to take a step back and first address how, we think Bitcoin mining critics fundamentally misunderstand its importance to Bitcoin. So first, mining is the backbone of what makes Bitcoin secure and decentralized. It's what regulates Bitcoin's fixed supply. It's what protects it against nefarious activity and allows it to have no centralized point of control. So when we're talking about energy consumption as it relates to mining, we really have to first consider what the energy consumption is enabling. And in this case, it's an apolitical, borderless, global synthetic monetary commodity. And that energy consumption is really no different than the energy spent to extract gold from the Earth's crust. The only difference here is that Bitcoin's energy footprint is just a lot more transparent. And so it makes it much easier to attack. Now, with that as the backdrop, even if Bitcoin does consume energy, it doesn't necessarily mean that it's destroying the environment. So Bitcoin critics who argue Bitcoin's bad for the environment conflate energy consumption with actual carbon emissions and pollution. And so what we tried to lay out in this most recent open source model is that Bitcoin mining can actually be a net positive to the environment by accelerating the adoption of renewables. And then we lay out the specific implications that it could have for solar energy systems in particular.
Still don't quite get it. We were just showing a graphic from Bank of America,
Sure.
Merrill Lynch, which showed that not a lot of other human activities generate a higher carbon footprint per dollar. And in fact, $1 billion in Bitcoin purchases, they say, is equal to the CO2 emissions of 1.4 cars driven in 1 year, 1.2 million cars driven in 1 year. And then we're showing some other 1.5 coal-fired power plants per year, 632,000 home energies used for 1 year. Is that wrong?
Yeah, let me first address that framing, and then we can get into the actual model and how it relates to solar energy systems. So a lot of the analysis that you're seeing here is a transaction energy cost analysis, which a lot of people reference, and in our belief is completely flawed, because Bitcoin's energy consumption doesn't actually scale with transaction throughput. So it's very easy to come up with some sort of metric of, look how much energy we need to consume to facilitate a single transaction. But there is no per transaction energy cost in Bitcoin, in that each individual transactions don't actually carry any energy payloads. That goes back to what the use of mining is. It's really a means to facilitate the newly issued supply and then effectively reward these miners for securing the network. So the quantity of resources that miners are willing to spend has nothing to do with the number of transactions that Bitcoin can support.
Shepard Smith here. Thanks for watching CNBC on YouTube.